Hello and welcome everyone. I'm recording this video yesterday night and now is Thursday morning, the day after Tesla earnings call. So forgive me if there's not some of the information in that happens here pre-market. But yesterday was a very, very important day. I think one of the most important days in Tesla's history. Now, I also see that the market is not reacting sufficiently bullish on this whole thing, which opens up many opportunities for us. So let me first go through what was actually happening here and why it's so decisive for what we do next. And I will make this as quick as possible because there's a lot to talk about. And I will condense it to the most important things we need to know to take action today and the next days to generate maximum alpha on this crazy bullish situation we have. So I'm not going to go into all the little details of the numbers. Long story short, it's exactly as I predicted. No surprises. The numbers came in a little worse than people expected. Top and bottom line miss. As I mentioned a little bit, I also mentioned this is probably not important at all. That exactly happened. The stock dropped down to 360 and then recovered pretty dramatically when people actually started reading the other things in the report and then listened to Elon. Here are the two most important things to take away from these earnings that surprised me. I always tell everyone we have hard catalysts and we have soft catalysts for Tesla. And 2025 is the show me year. The soft catalyst, the great story about Optimus, the great story about AI and robotaxis has run its course. We now know, or we knew, that the soft catalyst and this fantasy of these amazing new revenue streams can only carry the stock to 480. It cannot go beyond 480, at least without the market not exploding upwards. Because people price it in, but there is no tangible date. And that's what I call the hard catalysts. But if we get a hard catalyst on Optimus and a hard catalyst on FSD, on Robotaxi, that is a game changer. And a hard catalyst is the exact date when money is coming in. And in a believable way, not in an Elon random thing way, but in a way where we believe, okay, Elon is now saying something we can actually build on. And that happened this earnings call. I was surprised. I did not expect it. I said before the earnings call, it would be nice if Elon nails it down to a quarter and says we have Robotaxi launch in this city in Q3, for example. But he did something much more extreme. He said we will launch Robotaxi commercially. You can pay for this in Austin, specific city, in June. Number one, that's a month, not a quarter. Very important because it makes it much more believable. And number two, it's not in Q3, it's in Q2. So that is insanely bullish. It also puts in a flag in the sand that I actually believe. Elon is not going to say we launch it in June if we don't launch it in June. He would have been more soft on it. Also, it coincides with my predictions on AI developments and everything. So we have Robotaxi June launch, huge. It's a hard catalyst. That this is the wall that comes towards the bears. And then we have Optimus, crazy news. So Elon talked a lot about very specific things. I think the most powerful thing that he said is they will have tens of thousands of Optimus next year, basically preparing for mass production this year. And they will have commercial prototypes or commercial deals with other companies in the second half of 2026, which is in my model also something anticipated, but on the early side of things. And I could also tell the way Elon talks about it, that things are actually progressing faster than expected. And there's also something important I put on Twitter, that we have indications that they're ahead of schedule, which is not too surprising if you understand robots as opposed to cars. So all I predicted is becoming actually true. And I predict things, I put them in models, and I put risk discounts on them because we don't know if they're really happening. But now the risk discounts go really down because there's less and less risk. So more and more confirmed that the fast timeline is actually true. So why is it so bullish? Because it puts flags in the sand that big things are going to happen this year. And this creates what I call confidence. And confidence means money. Because nothing is more valuable in trading than having confidence about something that is going to happen. I don't care what prices. I just want to know what is going to happen, when it's going to happen, and want to have high confidence in that because then you can kill it. Okay, so suddenly the timelines changed and become much more confirmed this year, and we had surprise two hard catalysts coming up. Mega bullish. Number two, let's look at macro before we go into the trading strategy. Macro, I want to revert back to FunStrat and their theory. Just very briefly, you can read on my Twitter. I think I also had it in a video. The theory of Tom Lee and his team that I think is one of the smartest teams in macro is that in 2025, we will see a significant up year if January starts green, right? And we have only 2 days left, today and tomorrow, before January is over. And I do not think there's any chance that January doesn't close up 2% or something. So we are confirmed January positive. That makes the probability the whole year will be positive, roughly 89%. And Fundstrat says in their theory, that's reasonably good, that most of the run-up happens in the first half of this year. Then there will be choppiness and maybe a correction. And the year will then end up higher. I think they said higher than the highs in the middle, but there will be a significant little valley and not much higher than the middle. So most of the gains will be achieved in the first half of the year. So we have to put these things together. All of that is not guaranteed, but is more likely than not to happen. So now the interesting thing is that we see these hard catalysts coming by June 2000. So before half of the year in Austin, we have this very tightened timeline for Tesla that overlays with a macro timeline that also confirms, yes, the run-up is likely to happen in the first half of the year, which is now. Now I have another important catalyst I want to throw in, and that is the psychology of Robotaxi and robots, both Optimus and Robotaxi. I think besides the hard catalyst, which is cash coming in and revenue being unlocked, there's also a relatively hard psychological catalyst of people seeing Robotaxi and also robots in real action in real life. I think once people see these videos, these unbelievably crazy videos of robots doing things, but also of robotaxis transporting people, not to be confused with Waymo, which is a joke. It will be a very different visual impression when Robotaxi does these things with Tesla and all the hype around it. I think these things inevitably will boost the stock. It will make it visceral, the whole thing. So that's also coming. And the Optimus video, soft, hard, whatever psychological catalyst is coming to probably in the first half of this year. Because if they want to launch this at scale, they will show videos before July. All of that tells me, when I look at the timeline, that we are getting into the hot zone. And you know what I think? I think we are more or less guaranteed that Tesla hits 11 or 12,000 by 2030. On the move, on this 30x move to 12,000 in the next 5 years, there will be ups and downs. And you know Tesla, there will be massive ups. Most of this upside will be realized in 4-week sprints. That's what we have seen in the past. So you wait the whole year, nothing happens, and it goes up 300% in 4 weeks. That is what we have to expect. In smaller bursts, it is still significant, 50 or 100% in a very short period of time. You cannot wait until this thing goes up. Then it's too late. You're literally too late within 3 days if something big happens like that. You need to be in before. That's why we have these timelines to predict when this is going to happen. Now, what I'm saying is my level of certainty that we will see a crazy run-up of some sort, nothing compared with the crazy run-up we will see in 2026, which I think will be a 300, 400% run-up, but some significant, 50% run, or 30 to 50% run, we will see in the first half of this year. My level of confidence and certainty is going up dramatically after this earnings call. So when you do the math, that's only 5 months. When we have a time period of 5 months where we have a high level of certainty, we see this kind of run up, we need to take action. So let's get to the point. What is the strategy here? Well, first of all, I want to bifurcate my commentary here into the 2 groups of people that are listening. I know you guys, and you fall into 2 groups. One group is the call option curious group that doesn't want to touch it, which is probably very smart unless you're hyper obsessed with trading and understand these things, because they are weapons of mass destruction. Do not touch call options long. Short is a little easier if you do right, but long, don't touch it unless you're super committed. So that's the first group. I call them the conservatives. So conservatives who are smart put a very large chunk of their portfolio into Tesla, 100%, 90%. That's a conservative take on the future. Why is it conservative? And why is it smart? It's smart because you probably make 30, 40x in the next 5 years, which is a lot. You know, you put in $100,000 and you come out with 5 million. That's pretty good, or with 4 million. And it's very relaxing because there's very little risk. You just put your money back in and then relax. And over time, look at Peggy. Peggy is the master of incrementally increasing his Tesla holding, you hodl the hell out of it. You don't care if it goes down or up because in the end you make your 30x. That's the conservatives. Now the aggressives is what I'm more interested in. I mean, I love the conservatives. You do your thing. It's very smart. You will make a lot of money. The aggressives, of course, say, I'm not happy with 30x. I want to make 200% a year, which is much more than 30x. So they go into options trading. I'm one of them. And that doesn't mean you go all into options trading. Everyone who is a smart strategic Tesla investor should have a core position and then trade around it. And you know all my commentary around that. So what do we do if we take an aggressive stance and want to capitalize a little more aggressively on what is happening here? I always, when I tell you these numbers, I'm sharing my strategy. I'm normalizing what I do quantitatively around an assumed 1,000 share Tesla core position. So if you have 200 shares, divide everything I say by 5. If you have 10,000 shares, multiply everything I say with 10. So I'm assuming we are holding 1,000 Tesla shares in the core position. What do we do now? Okay. Yesterday, you saw my strategy. I have some short calls, some short puts. They paid off as planned. My prediction was pretty accurate. Actually, super accurate. Maybe I do another video on this super accurate prediction I made on the earnings. I said it's going to be in a plus minus 5 range, the stock. But I'm leaning bullish, very likely more towards the plus 5%. And right now, after hours, Tesla is exactly up 5%. So that was a good prediction. I can explain maybe later why I arrived at that point. Let's see what happens on Thursday, today. What do you do with 1,000 Tesla shares if you want to get aggressive? Well, the first thing, you have to put in your max commitment into options. What is the max allocation you are comfortable with? I'm always saying if you want to be aggressive, a good rule of thumb is start with thinking about 20% of your portfolio in options in Tesla. Only do this with Tesla. I don't know anything about anything else. So 20% options, max allocation. It's a little more vague because it does not mean you go in with 20%. It means that's in your mind, the allocation you could afford to lose 50% off. So if you go in with 50%, it's just starting to hurt, right? So you're getting in a very dangerous territory. If you say 20%, that doesn't mean you go in with 20%. It means you can go up to 20%. And you always have to expect once you put in an option position that the stock moves against you, you need to be able to do dollar average, cost average into that position. But right now, I think we are very bullish, as I just explained, and things are really heating up. So I don't want to be too conservative. What I'm going to do is I'm going to commit 10%. So in the case of a 1,000 Tesla share portfolio, that's $40,000 committed into call options with some dry powder left, right? So we can go in up to another 40,000 if things move against us and we decide to do that. And the options, I believe, are the smart move here. You want to give yourself enough time, but we have a clock on this whole thing. I think by June, big things are going to happen. If you put in 2 more months, July, August, as buffer, just in case you're at August, then you put in another, 4 to 6 weeks that you want to avoid theta burn. You don't want to hold options that are very short term. You want to sell these options weekly. That's what we do because you get all the churn. But you don't want to actually go long these options short term. So if we aim at maximum August and then add this little theta insurance, you are talking about September, October, probably more October, but I think there are no October calls. So September calls, expiration, and we don't want to go too much out of the money. So probably 470, 480, depending on exactly how the stock opens. And they cost roughly $50. 470 October expiration costs $50. So you break even at, if you hold it all the way, which I do not expect to do, they break even at 520. You buy 10 contracts. It's, you spend $50,000 on that. And then there you have it. You just added another 1,000 stocks to your position indirectly, right? You have 10 contracts at 100 stocks. You have 1,000 Tesla core position in stocks. Now you have another 1,000 in options. You just leveraged up 2x. And you can double down more if something happens. My gut feeling is the stock is probably going to run. I think what's going to happen is, depending how it opens, if it truly opens at 4 or 5, it would be nuts after this earnings call. that would be a gift from the gods. We buy it. And then I think the news will trickle in. I think Dan Ives and all these people will then start talking about it on Thursday, will write about it on Friday, maybe update their price targets on Monday, and then it will dawn on the other guys. I think we could easily run from here to 480 short term, then maybe drop back, maybe only run to 460, who knows? Then drop back. So you want to basically exit the option position if that happens very short term. And well, I'm not telling you what to do. That's what I'm doing. This is not investment advice. Think about it yourself. It's very dangerous. So what I would do is if it runs up short term to, let's say 450, you want to get out, probably likely going to drop back again a little bit, probably not too much, and then continue on its ride up. And once these robotaxis are actually getting deployed, and once these Optimus videos are coming out in the first half of this year, they have to be coming out, that will boost the stock again. So I think maybe we see a short-term boost of the stock, very likely to happen probably after this call, but with a slight delay. Hopefully you write this up, get rid of the options, drops back down, then you double down or go back in again, because very likely towards June, there will be a strong forcing function. I wouldn't wait until June. The forcing function can kick in probably earlier. The Optimus video, that's just an orthogonal angle to Robotaxi, is going to come out. I guarantee you something will come out of it, like visually. And there you have the strategy. That is the strategy that I'm going to deploy. I'm definitely in greedy mode. I think macro setup is very good. Now we have confirmed timelines from Elon. This is not a drill anymore. This is the first year of Tesla transformation and repricing. A little precursor for the big year, which is 2026, especially in the second half. The whole world will be forced to buy this stock like insane in the second half of 2026 for many reasons. Optimus being the first, the total implosion of the ICE industry is the second, the total takeover of the automotive industry by Tesla FSD also happening in 2026 in the second half. So this is the year where it easily goes to 2,000, 3,000, whatever it is. I think this year we see a little precursor. We see 100% run up from here. Or, a 30 to 50%, and then we end up with 50% plus, in my opinion. For the aggressive options trader, it's all about figuring out when exactly what is going to happen. You can have a year where Tesla doubles and you still stand there having lost all your money in options. That's why it's so dangerous. So that's kind of the game plan. 8 months out, 7 months out options, 70 for 80 strike. Go in now. I'm going in now with roughly 10%. Then we see what happens. Probably getting out if it runs too quickly up. And then we are standing ready for the next tactical action. So that is kind of my prediction. I'm happy that the earnings call turned out pretty much exactly as predicted. But I did not expect these two mega catalysts to be so clear. I'm very happy that the market doesn't really seem to get it. Even though you could argue on conventional terms that was a bad earnings call and the stock is up 5%. So maybe the market gets a little bit of it, but I don't think they get the full picture yet. So we don't wait until they get the full picture. We go in now. I hope that was helpful. Let me know what you think in the comments, but this is getting extremely interesting. We're off to a good start for this year. This is one of these decisive years, and this is not a drill. So see you next time.